Reserve Bank of India today declared its monetary policy, and it was not expected that they would declare a 35 basis points cut in the repo rate. Most analysts and economists had expected that the rate cut will be somewhere between either 25 or 50 basis points cut. But the RBI really sprung a surprise by reducing the repo rate by 35 basis points. That has taken the repo rate now to 5.40, and this is the fourth cut during the calendar year. What's interesting to note that the Reserve Bank of India has now cut the repo rates of, in fact, more than 1% through the year. And despite this, we are not seeing too much of traction in the economy. When the Reserve Bank of India, let's explain a bit on what is the repo rate. The repo rate is the rate at which the Reserve Bank of India lends money to the commercial banks in the country. When this repo rate is reduced, what happens? Banks' cost of borrowing from the RBI reduces, and they tend to reduce their lending rates to the borrowers. Now, but it does not always happen. As I said, even if the RBI cuts the borrowing rates for banks, which is called the repo rates, they need not necessarily transmit it to the end user. So logically, home loan rates, auto loan, gold loan rates, etc. should fall if the banks pass on the rate cut to the end customer. But that does not always happen. So we are hoping that with this time the 35 basis points cut by the RBI, we would see a similar cut by banks to the end user or to the retailer, those taking home loans, car loans, auto loans, and gold loans, etc. We hope that the transmission will happen. Now, one of the reasons for the cut of 35 basis points in today's monetary policy review meeting was that economic growth is sliding, and at the same time inflation is very low. So that allowed the RBI to cut interest rates. What's most interesting also to note is that the RBI has maintained its stance that it will continue to adopt an accommodative policy. Now, when you say an accommodative policy, means the RBI has scope to cut interest rates even further. This is good news for us because it might propel the economic growth and at the same time lead to higher demand and push spending in the economy, which is always good to push economic growth. The GDP has been also revised, and the RBI expects in the range of 7% GDP, and out of 6 members, 4 members voted for a 35 basis points cut and 2 voted for a 25 basis points cut in the review meeting today. So as is happening across the globe, most of the central banks are cutting interest rates. We saw earlier last month the US Federal Reserve cutting interest rates, and now the RBI has cut interest rates. We are seeing this accommodative stance being followed throughout the globe. We hope that with today's rate cut, the RBI's rate cut, banks can cut interest rates on loans for the borrower so as to push economic growth ahead.